Happy New Year again from all of us at Hart Energy. I'm Jessica Morales. Welcome to the second of two segments examining what to expect in the oil and gas industry in 2018. We reached out to industry experts near the end of 2017 to gain their perspectives in the areas of operations, markets, and M&A. In this segment, we asked them about significant industry trends.
In 2018, there are a number of things that are going to be important. One of the things that we believe will be important is the emergence of what we call a super hog. We just classify any well that clocks in and for peak production of above 1,600 for the best month as a super hog. We've seen that caliber of well just growing almost exponentially, right? So we're getting a lot of monster wells. This is important because what it does is it means that you need fewer and fewer rigs, right, to get more and more production. So you get an increased sort of non-linearity between the two. So we're seeing the rise of these truly monster wells become much more ubiquitous.
The thing that happened in 2017, which was just an explosion, it was kind of like a new basin, is all this technology stuff. So we're referring to it as E-tech or energy technology. And so we ourselves have launched an effort in that. But it's been dramatic the way in which technology companies have looked up and said, you know, those energy guys, they have a lot of need, I bet we could help them. Energy companies have looked up and said, gosh, and there's some good examples of people doing this, but energy companies are realizing we could do things a lot better and there are a lot of tools that we're not using. That explosion has been dramatic, and I think we're going to see even more of that next year.
I think it's going to really revolve around how getting more volumes to market. It's really going to revolve around how infrastructure and processing and the ability to get sort of the crude and gas from out of the ground to the customer. And up until now, we've seen a real ramp up in drilling activity as the price has gotten better over the course of the year. But into next year, it's really going to be about setting up the market so that it can create more value overall and really find the customer.
I think one of the significant trends that we'll see is sort of whether consolidation will continue and whether we're sort of done with the round of consolidation. Obviously in 2016, we saw a lot of market consolidation, especially on the upstream side and even on the midstream side with some mega mergers and mega acquisitions. And one of the trends we'll have to keep an eye on is whether that's going to continue or whether that's sort of settled out. I think there are companies that will struggle if prices don't go up because they've been relying on that, and they've been relying on accessing the debt markets and accessing the equity markets on a theory that commodity prices will go up. And if they don't, then I think there's going to be some reckoning. But once again, you know, fortunately, there's been a lot of shifting around. There's only been in the midstream space 20 plus bankruptcies in the last 3 years and only a handful in 2017. And you know, hopefully these companies will find opportunities to strengthen themselves without going through that process.
The other thing is that, you know, again, the traditional kind of private equity investments for a lot of funds of backing a management team, moving into a new play, finding acreage, proving it up. A lot of questions about whether that model really works today when the investment is really focused around a couple of basins. Are there other basins that will come online or not? And in light of that, people are looking at different kinds of transactions. Do we invest in minerals? Do we do something that's maybe a little more of an LBO type investment as opposed to an organic investment? So I think you'll see a lot of capital sources moving into other types of products, and it'll be interesting to see if what really gains traction and who really comes out ahead in that process and who doesn't. I mean, to your point, there are also some companies that are surviving in today's environment that may struggle to continue if something doesn't change. So those are all some of the wild cards for 2018.
Finally, we wanted to know what our experts considered to be the biggest challenges facing the industry in the coming year.
I think the biggest challenge lies in coordinating operations. We're moving to a level in which we're drilling increasingly complex wells. We're not drilling as many as we were in 2014, but it seems like we're putting a lot more into them. And managing, particularly in the Permian Basin, managing all of the ancillary things that need to line up, whether it's water handling, right, water sourcing, whether it's gas processing, whether it's pipeline takeaway. As everybody tries to crowd through this, we'll have more equipment, as I said, but in general, trying to coordinate all of the things that need to happen to take a well from a patch of dirt on the ground to a flowing gas and oil well is a difficult thing when everybody around you is trying to do it as well. So that's the key, is that ability to put the pieces together in a way that doesn't allow your cost to get out from under you.
I think the biggest challenge for all of us is volatility, and it could be North Korea, or it could be OPEC, it could be some other event. But I think the world just feels more volatile, and energy is usually more volatile. It's a more elastic area, and so if the world is moving around, energy tends to move around more than your average sector. And so I think the number one problem is volatility.
I think that there are still going to be challenges geopolitically. Now, a lot of this market is being driven by OPEC and being driven by their decision to stay cut. That creates uncertainty, and that uncertainty is going to make it hard for different companies to plan. And also, right now, there's some financial pressures. The forward curve of crude is backwardated, so future prices are lower than current prices, which is going to create challenges for hedging. So it's really going to be about getting that foundation that we think that has been built this year, and then taking it to the next level and being able to create value into 2018.
It seems like for 2018, it's a new game. So whereas I think a lot of the historical energy investors kind of had figured out how to play the game in certain environments, so many pieces have moved now. The industry survived a very tough downturn. The industry survived for the most part. Obviously, there were a number of people who filed for bankruptcy and restructurings, but on the whole, the industry has survived very well that downturn. If you look at production and a lot of the other metrics, but it's a different environment, and so how do you get returns in today's environment? And I think that's going to be one of the interesting questions for 2018.
I agree. And another one related to that is sort of how these companies will continue to finance their activities. A lot of them have to look at their stranded assets and say, okay, I've got this stranded asset or this asset that's not as productive or as valuable. What am I going to do with that? Is it just going to sit on my balance sheet and hurt my overall returns? Am I going to offload it? And then similarly, when they're looking at hot plays, it used to be, as we all know, that there was a pretty symbiotic relationship between the upstream and the midstream, where everybody knew the upstream did the upstream side and the midstream did the midstream, and they had different return profiles and they had different things they did. Well, that's starting to change, as we saw in 2017, and I think as we'll see more in 2018. There's a lot of new structures where people in the upstream space say, hey, look, I want to be part of that profit margin on the midstream. I want to balance my risk. I want to do a joint venture with you. And people in the midstream are saying similar things. They're saying, hey, look, we don't necessarily want to take this risk solely by ourselves. So let's get you, the upstream producer, to be part of this. You'll give us a commitment, and we'll all sort of work hand in hand and move forward in that respect.
That concludes our Outlook 2018. Thanks to our experts from IHS Markit, Tudor, Pickering & Holt, Sidley Austin, and Stratus Advisors for their insight. And thank you for joining us. For Hart Energy, I'm Jessica Morales.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.